Yeah, 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 yeah. What's going on, family? What is going on? What is up? What is up? What is up? Welcome to another live Asian session with your boy Abel. Super excited to be here with every single one of you guys tonight because we're able to come on here and ultimately get better. That is the goal for me, is to help you guys continue to improve on your trading journey, and hopefully I've been able to do that so far. Because what I teach here, guys, on this channel is definitely a lot more in-depth, a lot more aspects of trading that are rarely pretty much touched on via a lot of different platforms, a lot of different academies, courses, whatever the case may be. So hopefully the value that I am giving you guys and have been giving you guys consistently for the past month, maybe 2 months now that we've been doing these live streams, live sessions, has been absolutely super beneficial for every single one of y'all. And if it has been, all I ask is for one favor. Go ahead and smash the like button right now, family. Go ahead and smash it like your life depended on it. Because that's all I really ever ask of you guys. It's just to go ahead and show some love by smashing that like button. But let's go ahead and see what we got in the building today, family. Go ahead and drop your locations in the chat. I see we got New Jersey in the building. What is going on? Right, we got my guy Bert in the building. What's going on, Bert? Good to see you in the chat. Right, we got Las Vegas in the building. We got the Boot in the house. What's going on? We got Jackson, Mississippi. What is going on? Let's see what to do. Getting the hang of this Asian pre-on London sessions. Flame on. Let's go, V Glove. Appreciate you. Right, we got Chicago in the house, plus 15 people on the Zoom from Mexico. Big shout out to you guys out there in Chicago. And Christian, I want to give you a massive congratulations as well on your big news that you just released this week. Shout out to you, man. Shout out to you and the wifey. Definitely is absolutely amazing to see what you guys are doing and what you guys are going through, right? So massive shout out on the actual proposal. I know you guys are gonna have a phenomenal time during the actual event, but definitely big shout out to you, my brother. I appreciate you for tuning in. Right, we got Phoenix in the house. What's going on? Shout out to you guys in Phoenix. We got Vermont in the building. We got St. Louis in the house. We got London, Tampa, Florida, Colombo, Sri Lanka in the building as well. Shout out to every single one of y'all that's tuning in. We got London in the house. Massive shout out to every single one of y'all that are with us tonight. Again, super excited to be here with every single one of y'all as usual. You know, because I actually get a lot of excitement doing this, right? Like, there's people that do this because they feel like they're forced and they have different motives. But for me, guys, like, I actually like this. Like, I actually love coming on here. I love providing you guys value. I love having conversations with y'all because, yeah, it does help you guys out tremendously. But this also keeps me sharp, right? It puts me also at a point where I got to continue to grow. I got to continue to improve, because if I want to be a teacher, if I want to be a mentor, then I have to continue to get better every single session that I host, right? And be honest, I've been doing this teaching thing, guys, on the Forex side for a while now, right? I've been teaching Forex and teaching how to trade, you know, this specific financial market for the past 4.5 years. And it's been an absolute journey. It's been an absolutely amazing to see the success stories, see the testimonials. And I'm blessed and grateful to say that I have literally thousands and thousands of testimonials, guys, from people across the entire world that have gotten some type of value from me. And that is what it all comes down to for me, is being able to be that person that people can come to, that people can look forward to, and just get excited about listening to, because they know I'm going to come strictly with raw value, right? So I see we got B More Tony. What's going on, Tony? Good to see you in the chat. We got Miami in the building, Utah, Australia. We got the Bronx, New York in the house. Shout out to you, O'Neal. What's going on? All right, so let's go ahead and see what we got going on, family. So overall, again, today there wasn't too much news overall. We did get initial jobless claims that actually got released, and we also did have PPI data that came out. Now, again, the initial jobless claims, guys, is definitely something that's important, because, you know, employment or having a strong jobs market, guys, is one of the main important things that the Federal Reserve focuses on. They have two main goals that they focus on, guys, and one is having strong job numbers, and the second one is to have stable prices across the board. But obviously, because the prices have not been stable because inflation, the other thing that they've been really relying on was having a strong jobs market, right? A reason why they've been downplaying inflation so much and downplaying, you know, everything that's been happening now, it's not just because they didn't want to cause too much fear in the markets, which would have absolutely tanked the stock market, but it's because the job market overall, guys, still has been pretty strong, or at least it was being pretty strong. But as of lately, we're starting to even see the job market, guys, finally start to pretty much take a hit. where we're seeing interest rates, or not interest rate, but we're seeing the unemployment rate possibly actually start to go higher. Now with the initial jobless claims, which pretty much measures, guys, the number of people that filed for unemployment for the first time this week. You know, just like I told you guys yesterday, I'm expecting this number to continue to increase over the next few months, possibly the remainder of this entire year. We should see this number continue to increase overall. Now, for those of you guys that have been paying attention, family, to what I've been providing, the value that I've been providing you guys from more of a fundamental, sentimental perspective, why should we be expecting this number to continue to increase, right? Why do I, and this is just my personal belief, right? I've been very accurate, you know, pretty much since we started doing these live streams with my predictions on what's going to happen, and that's just because I understand the data, right? But why do you guys think, or why do I think that this number is going to continue to go higher? Because last night, before this number actually came out, I told you guys that we're probably going to end up coming out higher. It's expected for us to actually come out higher, right? Which means we're seeing more people filing for unemployment every single week. Last week there was 235,000. This week there's 244,000, right? So we can see a little trend starting to go to the upside, guys, when it comes to people actually starting to file for unemployment, right? And if we really look at this little graph that we have down here as well, guys, I mean, ever since April, where we pretty much had the lowest rating, or the lowest reading for, you know, this specific release at 167, ever since then, I mean, we've been pretty much trending higher and higher and higher and higher, right, ever since April. Now, again, the question that I have for you guys, and this one might be a little trickier question, right? Because you really got to understand how all this data really works, right? And how to interpret it, right? But the question is, why was I expecting this data to actually come out higher? Why was I expecting more people to actually start filing for unemployment? And why do I expect this number to continue to increase throughout the remainder of the year? Does anybody know the answer? This is a trickier one. I'm going to be honest. It's a trickier one for sure, right? Because it's more so like side effects of different data that's coming out that's causing this number to go up, right? But does anybody know? Let me see in the chat. Wealthy fam, what it do? What's going on, Oscar? Good to see you in the chat as well, my brother. I appreciate you for tuning in tonight. All right, hopefully you learned something new, right? That's my goal ultimately, guys, is to give you guys something new, have you guys learning something new on these streams. That's my goal. Okay, now let's go back to the question that I just asked, because like I said, this is a little bit of a trickier one, but it is very important for us to understand, right? Because again, guys, fundamental data is what ultimately causes the market to move, right? It's more so the rumors on the fundamental data that causes the market to move, but overall it's still very important for us to really pay attention to this. Okay, let's see, right? Inflation, right? Yeah, inflation is definitely playing a big part into why we expect this number to go up, right? It definitely is. Shout out to you, Melody. I appreciate you for tuning in again. Right, my guy Kyle, what's going on, Kyle? Good to see you. We got more job layoffs due to profit margins shrinking for companies. That boy Kyle is always on top of things. Right, yeah, exactly. High inflation results reduce job openings and quits. Right, that's partial. It to slow down inflation, less money to spend. That's a good guess, but it's what Kyle said, guys. Right, because of everything that's happening right now, because of inflation increasing across the board. Let's even look at PPI, right? Let's bring PPI into this as well, because PPI is the producer's price index, guys, and PPI measures inflation for the producers, for the creators, for the business owners, right? So if PPI is increasing, which means that inflation, the cost of goods and services, the cost of the price of goods and services that it costs these businesses to operate, if that is increasing in value, that is shrinking their profit margins. Right now, if the companies that we're dealing with, that we deal with on a daily basis, if they start to see their profit margins starting to decrease because inflation is going higher, making everything cost more, then they have to cut costs in certain avenues. They have to cut costs in certain ways, right? One of the first ways that they do it is they usually start cutting costs in things that it's really not too necessary, right? Like more so things like maybe advertising and marketing costs and things like that. But then after that, they're going to start laying people off, right? In fact, guys, if you guys haven't looked around, if you go to the news, you can see that there's big time corporations and big time companies that are already starting to lay off a lot of people. And this is only going to continue to happen. We're going to see an increase of people getting laid off simply because of what's happening over here, and not just over here, but what's happening across the entire world. High inflation means the price of doing business is also going higher, which is shrinking the profit margin for these companies. They have to try to make up for that in some ways, and they're going to do it by cutting people's jobs, cutting unemployment, right? Or at least, sending people to the unemployment line. So that is a reason, guys, why we're seeing this number actually continue to uptick every single week, right? It's because now they have to figure a way to recoup the losses that they're gaining because of inflation, because of interest rates going up, because of all these factors that we're all dealing with today. So that is exactly why, guys, I expected this to happen. And I mean, it literally did exactly what we expected it to. But PPI also came out higher like we expected it to, right? Again, it was forecasted to come out at 0.8%. It came out at 1.1%, guys, and this is the month over month. So the cost of doing business now increased by 1.1%. So now these business owners, guys, are paying 1% more than what they just paid last month. And that is exactly why we're seeing the initial jobless claims continues to go higher and higher, family. So go ahead and drop some threes if this is making some sense for you guys tonight. And while you're dropping those threes, go ahead and smash the like button too for me. Only if you're getting value, smash that like button. If you haven't done so just yet. For all you guys that smash the like button from the bottom of my heart, I truly appreciate y'all, and I really do this for you guys more than anything, the ones that actually do support the channel and help this thing actually continue moving, right? Because like I said, family, I know I probably got some newer traders on this call that are probably on my streams for the first time. My goal is to be one of the greatest, if not the greatest, YouTuber in terms of providing Forex value, Forex content, because I'm bringing the real, the raw, and what's necessary for everybody to really see consistency and long-term success in this lane, right? So I appreciate every single one of y'all that do show me massive love, right? So Chino, I appreciate you for dropping the 3. Oscar, I appreciate you. Mr. Golden Arms, I appreciate you. Shintaka, I appreciate you. Glamorous Princess, I appreciate you. Melody, I appreciate you. Kyle, I appreciate you. My guy Winston, what's good? I appreciate you as well for dropping those 3s and just engaging with me, guys, because yeah, the likes definitely matter, but also being engaging in the chat definitely also makes this stream and make this video, guys, go ahead and expand to a broader audience, and that's pretty much going to help me accomplish my goal. So help me, right, help you guys accomplish your goal. All right, my goal is to help you guys accomplish your goals, but you guys have to do me a solid back and just simply smash the like button and be active in the chat, because that's going to help me accomplish my ultimate goal. Right, so I appreciate y'all. Right, I appreciate y'all a lot. Shout out to you, Linda. I appreciate you, Rodney, Z, Creation. How are you doing? I appreciate y'all, Winston. I appreciate you, my guy Winston. What's good, dog? I appreciate y'all as well for going ahead and dropping those 3s, showing that you guys are understanding. So again, family, very important, right? Interesting data that we should expect to continue overall. At least for initial jobless claims, we should expect this to continue to increase over time, because we are seeing a lot more layoffs occurring, and there's no signs of it actually slowing down anytime soon, right? But those are pretty much the actual releases that we dealt with today. Now going into tomorrow, guys, we do have retail sales and core retail sales. This is also going to be very, very important, because one of the driving factors, guys, that's fueling this inflationary run that we're experiencing, right? One of the big reasons why, at least over here in the U.S., we have inflation at 9%, 9.1%, is because of retail sales, right? Consumer spending. People are still spending, right? Even with all these inflationary fears, even with interest rates going up, even with the cost of goods increasing, people are still spending their money. Now, if we want, and I say we, all of us, if we want to see these prices of everything that we're spending money on to go down, if we want to see gas prices start to turn around, if we want to see the price of food to start to turn around, if we want to see the price of everything turn around, then we need to stop spending money, right? Especially on the things that are really not necessary, right? Spend the money on the necessities 100%. And I'm just talking just to talk, so you guys can really just get a general understanding of how this works, right? But as people continue to spend money, that's not going to slow down inflation whatsoever. So with that being said, guys, tomorrow we do get retail sales. We are going to see if people are finally start to slow down. And if they're not starting to slow down, then that's probably going to continue to fuel inflation, and that's pretty much not what we want, because our prices are going to continue to increase, and that's definitely not what the Federal Reserve wants neither, because their main job, their main goal, their main objective is to try to fight inflation overall. So this release in the morning is definitely going to be very interesting. My predictions, right? I'm going to look at the retail sales real quick and see what the previous numbers actually came out as. Right, but my predictions, guys, if retail sales is still very, very strong, then normally, if we weren't dealing with all these different factors that we're dealing with, strong retail sales report is normally positive for an economy, right? Like, that's good news, right? When we see people spending money, we want to see money circulating through an economy. That's typically, if we weren't experiencing high inflation and all this stuff, then typically that would be looked at as something that's positive, that's good for the economy. And typically we'll see the indices, guys, like S&P 500, the NAS 100, the US 30, we'll typically see those increase in value with strong retail sales numbers. But because we want to see things finally turn around, we actually want to see the opposite, right? Like, we want to see this number actually come out much lower, right? Like, we want to see this number, guys. It's forecasted right now, U.S. retail sales, not the core retail sales, but regular retail sales. It's expected to come out at 0.2%. Let me actually just confirm this, right? No, it's actually expected to come out at 0.8%. 0.8%, right? Now, the previous release came out at negative 0.3%, right? Once they actually updated it, right? This is going to be very important for us to understand. Because if we're now starting to see negative retail sales numbers, then that means that people are actually starting to slow down. If we get another negative reading for whatever reason, right now it is expecting, for whatever reason, whoever made these predictions are expecting for retail sales to go up to 0.8%. If that happens, then that's not good, right? But if it does come out at negative, then because of the situation we're experiencing right now, that might realistically bring a little bounce in the markets. It could, potentially, right? Again, everything is based off probabilities, guys. Everything is based off more so educated guesses, right? But, it's very interesting to see exactly what this does end up coming out as, right? But as of right now, guys, they are expecting, again, I'm not sure who's making these predictions, right? But they are expecting retail sales to come out at 0.8%. I think we're going to come out probably way less than that. My amateur opinion, right? I'm not an economist. I'm not one of these people that's on these websites that probably has years and years of college experience understanding this stuff, right? I've only really started taking fundamentals and sentimental analysis very seriously over the past year and a half. So I like to say my amateur guess is that we're definitely going to come out lower than what's forecasted, just because of everything that we've been experiencing, right? So overall, this is definitely going to be something that we have to pay attention to, guys, in the morning, because it will absolutely influence the dollar. And anything that's going to influence the US dollar is going to, by default, have a correlation, or is going to have an indirect impact on all the currencies as well across the board, right? So just for an example purposes, if data comes out for whatever reason and it ends up seeing the dollar and it sends the dollar negative, right? Let's say that data comes out and the dollar itself reacts in a negative manner. That's going to give strength to every other currency against the dollar, right? But if the dollar comes out strong based off the release, then that's going to make all the other currencies weaker against the dollar, right? So that's how there's that indirect correlation with the dollar based off these releases, because the dollar is still the currency reserve of the world. It is still the most dominant currency, even though right now, guys, it's crazy, but we are starting to see we're about to experience something crazy with the dollar, right? As of right now, the dollar is still the currency reserve of the world. It's still the strongest currency, but we are starting to see a change in that. I actually watched a video earlier today that India is one of a few different countries that's actually going to allow people to actually invest into their assets without having to be through the dollar, right? Normally, guys, if certain countries want to interact with other countries, if they want to participate and buy their commodities, it always has to be done in the dollar, right? They have to convert their currency into the US dollar through the forex market, and then that way they purchase that commodity or that asset in that other country. But now India just changed the game, right? India said, you know what? You don't have to purchase anything from us in the dollar no more. right? You can purchase it in other things, right, in other factors. So that is kind of scary for the dominance of the dollar, right? Because it's not just India, but there was another one as well that just came out with the same exact concept, same exact thing, saying that they're not just only going to take dollar payments for their commodities, right? And I'm pretty sure they're not going to be the last ones neither, right? So again, we are experiencing some crazy times as well for the dominance of the dollar, or more so it being the currency reserve of the world, because India is a big deal, right? India has a very, very strong economy, very, very strong, massive economy over there that, you know, does have some influence. So just throwing that out there, right? You heard it from me first though, guys, right? There is a chance for, yeah, the dollar dominance, or the dollar being, you know, hailed as this currency reserve of the world. Like it might come to a time where it might not really happen, right? So just being serious, right? Just throwing it out there, just something to really keep in mind, guys, because obviously that's going to affect, you know, the dominance of the dollar overall. All right, so let's see who else we got here, guys. Just wanted to go ahead and take a quick look and go over the news for the week. You guys know I'm very into understanding fundamentals. And the reason why we talk about this on every single stream, guys, because there's always new data that comes out, right? We have to stay up to par with everything that's happening so that we know exactly how to play it moving forward, right? So that's just pretty much our outlook for the week that we have there for the data that we have, you know, pretty much to finish out tomorrow. All right, so let's see what else we got here. Let me go just catch up with the chat real quick. I'm back. What's going on, Sam? How are you doing? Shout out to my guy, Sam. I appreciate you. Welcome. 20 pips, Savage. What's going on, dog? I appreciate you. What's up? All right, good to see you in the chats. Let's see. I don't see how it can come out that high. Yeah, I don't think retail sales is going to come out that high neither. That's just my opinion, right? Let's see. Stock's going to be dropping. Stock's been dropping like a sack of potatoes, 100%. They're going to take Bitcoin. It's very possible, right? That's going to be... I don't think that that's something that could happen right away, as like Bitcoin becoming like a real like currency reserve of the world type of thing. But it is very possible in the future once it actually stabilizes a little bit more, because Bitcoin is still too volatile, right? Bitcoin still moves way too fast. The price swings in Bitcoin is just way too volatile for anybody to utilize it as a safe haven currency, and more so to utilize it more so as a currency reserve, right? It's just way too volatile. But over the years, right, it will start to slow down. Its volatility won't be as much, just like how gold was when gold really came out and was being used as, you know, the main currency. It was extremely volatile. The price of gold was going insane, right? But over the years, it finally started to pretty much just level itself out and lose its overall crazy volatility. So Bitcoin, in my opinion, will eventually do the same exact thing. Let's see. Targeting mainly India and Russian transactions, coach. Yep, that's true. Right, India and Russia. Obviously, Russia, they have no choice, right? Because they're pretty much getting, they're getting sanctioned the hell out of them, right? And their economy over there is getting absolutely destroyed, right? Because of these sanctions, right? So Russia kind of has no choice but to deal in anything but U.S. dollars. But yeah, all right. Let's see what else we got here. Nothing lasts forever. That's very true, right? Let's see. Nigeria ain't taking the dollar either. So it was Nigeria, right? Exactly. That's the other one that it was. Right, so even Nigeria, guys, now you're able to buy their commodities and their assets without going through the U.S. dollar, which is what the norm was, right? This is a big freaking deal. Right, let's see. They've been moving to CBDC control. Yep. CBDC is central bank digital currencies, right? That's what CBDC stands for. Almost every single central bank across the world has been testing their own CBDC, their own, you know, digital currency, utilizing their own digital wallets. And in the future, that will actually be a thing, guys, right? Whether you want to believe it or not, but in the future, there will be a time where paper money, fiat currency, right? Dollar bills and coins, that's eventually going to be a thing in the past. Right now, I'm not talking about probably anywhere in I don't know, maybe 5, 10, 15, 20 years that actually happens, but they're working on it now. Like, they're actually developing these central bank digital currencies because it's a lot easier to track. And it's a lot easier to actually manage, right? So, you know, that's definitely going to be something that's very interesting. Now, again, there are a lot of positives, guys, to these central banks. A lot of positives and negatives to central banks coming out with their own digital currencies. But overall, that's just the future that we're heading into. Now, the big issue that they're having with these central bank digital currencies, because I did do a lot of research on this as well. I don't know. I think one of my biggest things, guys, is a little off topic, right? But I think one of my biggest blessings and one of my biggest assets that I personally have that has helped me out tremendously is my curiosity. Like I'm very curious, right? I see a new topic being talked about, and then I go down the rabbit hole, right, and just start learning as much as possible on that topic. So I actually did a lot of research on these central banks digital currencies, just because I seen an article on it, and then I watched a video on it, and then I went down the rabbit hole and was just stuck a few hours just doing research. That's just me. I don't know if I'm the only one in the chat that has that type of curiosity, but I'm a very curious person, right? Like I see something and I go down the rabbit hole and then I try to learn everything about it, right? So I'm just a geek like that, right? But back to that. So the biggest issue that they're having right now, family, with these digital currencies, these central bank digital currencies, is because the monetary system right now is pretty much being ran through the SWIFT system, right? The SWIFT monetary system, which pretty much connects all the central banks together, which allows the transactions to actually go ahead and go through pretty much seamlessly, right? But with these central banks, especially with the digital currencies, it's going to be a little bit tougher to actually do that, which is why SWIFT right now, which again, SWIFT is that monetary system that pretty much handles all these transactions. It's harder for them to actually do it too, right? So now even SWIFT had to develop some type of technology that's going to be able to also try to facilitate all that, right? But that's going to be interesting, right? It's going to be interesting overall. Let's see. Russia, India, China, and some other countries have been meeting and discussing Bitcoin to curve the dollar. Yeah, I believe it, right? I believe it. All right, let's see. Can you post the chart and analysis in the group? Yeah, I could definitely send any of these analysis that I create. I could send the updates. I actually like creating the videos right when I'm actually trading in the morning, New York session. You know, I like to actually give you guys real-time videos on the setups that I'm personally gonna be looking at, so I could do that as well. But besides that, guys, and enough of the news talk. Let's actually go ahead and see what the markets have been doing overall for the past 24 hours since I last was speaking to you guys. See if there's anything new that happened, and if there's anything that we could take advantage of going into tonight and going into tomorrow morning, guys, to pretty much finish out our week. It's been a very interesting week for me. I definitely had a very, very great week overall. Just pretty much riding out a lot of the moves that we pretty much been talking about overall. But let's go ahead and look at the markets, guys, and see what we have. So overall, guys, we've been pretty much, at least for me, I've been expecting more dollar bullishness to continue to come in. And overall, I mean, we did see that dollar bullishness actually come in. It just, again, it didn't reach the areas that I gave you guys here last night, right? Last night, guys, when we actually looked at, you know, my last stream that I held 24 hours ago, you know, I like to give you guys certain setups that I'm going to be interested in and I'm going to be keeping my eyes on. But I also give you guys opportunities in areas that I feel like are actually great areas to get involved in. But over the past 24 hours, the market did give us the move that we wanted to see, which was a continuation higher. It just has not retraced into those areas that I'm very, very interested in, at least just yet. So the opportunities that I was able to take today, I ended up doing market execution because I had no choice but to do market execution, right? Because it wasn't reaching that level, and I was just utilizing this moving average that I have on my screen, right? Shout out to that boy Floyd. I appreciate you, Floyd, newer subscriber. I appreciate you. What's up, right? But I actually utilized this moving average, guys, as a way to also enter the market if price is just not making its way into that key level, right? So that's just something that I highly recommend you guys to start doing, as well as reading price action and how it's playing off of, you know, at least the one indicator that I pretty much have on the screen, right, which is the moving average, the 50-period moving average. But overall, this is what I want to see, guys, going into tonight. I would love to see the market to finally come down to this 108 level. Again, I don't know if we are going to make it down to there, but I would love to see that level really get tested. I would love to see the dollar, guys, make its way down to that 108 level, and then from there, you know, we're able to see price rebound and continue its dominance to the upside. Again, I am extremely, extremely bullish the dollar. Why? Because I am still expecting risk-off sentiment to dominate overall. Right now, for those of you guys that don't know what risk-off sentiment is, go ahead and do your research on this, right? Understanding the difference between risk-off and risk-on sentiment can absolutely change the game for you as a trader. Because when you understand what the current sentiment of the market is, then you're going to understand exactly how to play all these different currency pairs and these different commodities and these different assets that we're actually trading. Okay? We are in a risk-off territory right now. We have been in risk-off territory for God knows how long. For at least the past year, maybe 2 years. Now, what does that mean? Very simple. Risk-off means to Go to safe havens, right? Look for safer investments, right? Pretty much to protect your equity, protect your money, right? That's pretty much what this means, right? When you see risk off sentiment, that means take the risk off the table, right? Don't be invested into riskier plays like the stock market. Don't be invested into cryptocurrencies. Don't be invested, right, into a lot of these other, riskier currencies like the AUD, the New Zealand dollar, and things like that, right? When we are in risk off sentiment, we want to hoard towards the safe havens, right? We want to go ahead and invest into the dollar. We want to invest into gold. We want to invest into government bonds, U.S. bonds, because those are safer plays that are traditionally going to hold their value during a downturn in the market. A very easy way to identify, guys, risk on or risk off is go to your favorite indice. All right, look, right here we're at S&P 500, which is pretty much like a gauge to pretty much tell the strength and the weakness of an economy, right? They use this right here, this indice right here, to actually do that. But whenever you see this increasing in value, right, this means that we are risk on, right? Go ahead and get risky. Right? Risky. Get risky. Get frisky. Right? But when we see this actually going to the downside, this is telling us that we are risk off. Right? Get off the risk. Take the risk off the table. It's not worth it. Right? So whenever we see the stock market increasing in value, that is telling us that we are risk on sentiment. Whenever we see the stock market starting to decrease in value, which is what we've been seeing, that is risk off sentiment. I promise you, and I will look at you directly in your eye when I say this. If you literally understand this one simple concept, it will elevate your trading 100%. Because now you know exactly where the direction of the market is. You know exactly what the order flow of the market is, and it would absolutely change the game for you if you truly understand this. Okay, so risk on, we expect the stock market, the crypto market, we expect all these different riskier assets to increase in value, right? The Australian dollar, the New Zealand dollar, those are typically considered riskier currencies. But during risk off, we expect the opposite, right? That's when we expect the dollar to be dominant. We expect the dollar to control the thing, to control the game. And then that's why we want to go ahead and be dollar centric, right? And focus heavy on the dollar and just buying the dollar overall. So again, risk on, risk off. Do your own research on that. DYOR, do your own research. DYOR, guys, I'm giving you $1 million worth of game right now. Just that one thing right there, that one little cheat code. If you've been struggling with really understanding directional flow of this market, if you DYOR, risk on, risk off sentiment, that in itself can truly change the game for you, right? Do that. I promise you. I promise you. And I say this with confidence, it will change the game for you. All right, so enough of that. All right, but let's go ahead and see now what the market's overall doing, guys. So like I said, I definitely expect the market itself for at least the dollar, looking at the dollar itself. I do want to see more continuations to the upside. What you doing over there being mad creepy? Scared the crap out of me. What happened? She's sleeping. My fault. My daughter just creeped in the room like a creep. Right, but like I was saying, right, overall, I'm still expecting a lot of bullishness, right? I would just want to see price come down into this key level first and then continue. It does not have to do that, though, right? Price does not have to do that. Price can literally just stop at these levels of structure that we also have right here, and it can also go ahead and increase in value as well, right? So it does not have to come down to this key level that I would like to see it come down to, but if it does come down there, you best believe I'm going to start buying the dollar like crazy. Right, I like that area right there. That's a nice level of structure, but it could realistically bounce off of both of these key levels, guys. So that's something just to keep in mind. Let's go ahead and look at certain assets and currencies that we can actually trade. Right now, EURUSD, this is something that I gave you guys last night. Literally, I didn't touch this at all. Like, it's literally the same exact markup, same exact opportunity, same exact everything that I was looking at with you guys last night. And I still like this, guys. I want to look for this sell-off, on EURUSD at the 1.007 level, to go ahead and expect more downside here, for the specific pair. Because why? Because if we are bullish the dollar, right now, I'm very good at trying to break things down, guys, right, for you guys, right? So if we are bullish the dollar, then that means anything that begins in USD, like what we're seeing here, should go down, right? Anything that is against the dollar, and the dollar is the second currency, we should expect this to decrease in value. That is the reason why we are now seeing the euro trading at parity with the dollar for the first time in 20 years. Guys, 1 euro is equal to 1 USD. We have not seen that in 20 years. In fact, there was a short period in time when 1 euro was actually worth less than $1, right? 1 euro was 99 cents to 1 US dollar. I expect that to continue. But I would love to see the market really give us this move higher, and I'm going to have a pending order waiting to see if we can go ahead and get up into this 1.007 level. If we can get into this 1.007 level, then I am going to sell it. All right, no questions asked. I'm going to take my risk 2%, and I'm going to go ahead and take this shorting opportunity, and we can realistically now possibly target these new lows that were ended up created, right? These new lows that were just created, we could target down to those lows and possibly even further, guys. So if we look at the setup right here, I mean, it's not a bad play, right? Logically, it makes sense. Technically, from a technical perspective, I mean, we have been extremely bearish the dollar, right? So the path of least resistance is in what direction, family? Go ahead and answer this in the chat. Right, go ahead and answer this in the chat, right? What is the path of least resistance right now? Is it to the upside or is it to the downside for the euro? All right, just look at this chart and tell me. All right, let's see who's participating tonight. Yeah, right. The path of least resistance is still bearish, right? We don't have no evidence just yet to say to go against that. We just don't. Right now, if the market for whatever reason ends up doing something like this and ends up giving us a lot of momentum out of nowhere, a lot of bullishness, then we might be able to come up with a case to actually start expecting this thing to go higher. But as of right now, guys, we don't have no evidence for that. Remember, we want to stay with the path of least resistance. Just zoom out. The path of least resistance is clearly still bearish. So I think that there's still a good chance for price to continue. Now, the market is going to do whatever the hell it truly wants to do. Right? So the market does, yeah, I'm saying all this good stuff, man. Yeah, the path of least resistance is bearish. Technically, it makes sense. Fundamentally, it makes sense. All that stuff does make sense, right? From a technical perspective, we're still bearish. Look for the sells. From a fundamental perspective, the dollar is still dominant. Look for sells. From a sentimental perspective, guys, we're still very much risk off. We're still talking about dollar dominance. Look for sells. But the market is going to do whatever the market wants to do. We do not control market direction, which is why risk management is probably one of the most important things that we talk about all the time. Right? Because you can have all the type of confirmations. You can have all the setups lining up. You can literally have everything telling you that the market's going to do one thing, and then it still wants to go ahead and stop you out. That's why we still follow proper risk. So I'm going to be risking 2% on this opportunity. 2%. If you take the same trade and for whatever reason the market decides to go to the upside and you blow your account, I don't want you coming on this stream saying, Abel, bro, what happened, bro? Abel, bro, what happened? We took a loss. That's all what happened. But I could tell that you're emotional about it, so you over leveraged, didn't you? Because, guys, again, trust me. Everything that you guys are going through right now in your trading journey, I've experienced it. Every loss that you've taken, I've taken it numerous times. Every time you've blown an account, I've blown more than you. All right, so I know exactly what I'm talking about, right? Where we come on, we listen to certain mentors. We were like, yo, this dude is very credible. This dude knows what he's talking about. He's made a lot of money trading. So when he calls a signal, forget risk management. I'm throwing that out the window, right? I get it. I was there, right? When my mentors used to call out trade ideas too, I'm like, man, I don't care who it is. I'm taking this and I'm going a little bit heavier. And then we end up taking a loss, and then you're upset that you did that, and then you start to lose some faith in your mentor, right? So please, I say all that to say this. Risk management is your best friend. Okay? Risk management is your best friend. Please treat it like your best friend. When your best friend tells you to do something, you normally do it. When risk management is telling you to only risk 2%, you better do it. Right? Because it's going to be that one time, guys, where you're trading heavy, you're risking 20%, 50% of your account, and you end up taking that loss, and now you're looking crazy because you lost. All right, now you're looking back like, damn, I should have never took that trade. Man, why did I do that? Man, why did I? What? And then you got to go through that whole state of mindset like, oh, man, why did I do this? Why did I do that? Man, I just blew my diaper money. Again, I could speak out of this stuff because I went through that. I did all that crazy stuff. I risked diaper money. I risked rent money, right? And I lost it all and put my family in crazy situations because of it. So trust me, I'm speaking out of experience. I'm speaking from experience that I went through that. I've been through it. And I don't want you guys to go ahead and go through it, which is why I'm talking so strong with you guys. All right, so overall, though, this is not a bad looking setup, though, guys. I like it. I'm personally going to be taking it. I'm going to set a sell limit and then go ahead and see if we can ride this thing out overall. Right, it does not look bad whatsoever. All right, so let's go ahead and see what else we got here, guys. AUD/USD, all right, another one. Right, AUD/USD is another one that we pretty much spoke about. Again, it literally came the other day, right? This is something that we actually looked at 2 days ago, right, with this setup that we had here, and the market really didn't give us that reaction. But if you guys were on yesterday's stream, right, I did tell you guys as well that the market could have came back up to this area that I was genuinely interested in, or it could have gave us a reaction right off of this level of structure, right? Because we do have this little minor supply zone right here as well. And the market did actually end up reacting off of this supply zone numerous times, right? Numerous times. Right, so that's very interesting, guys. So if you guys were paying attention to yesterday, you guys could have caught in this entry all day, for sure. Right, I'm gonna be honest. I didn't take this trade. I didn't trade AUD/USD yesterday at all. So or in today. So I didn't take it. But overall, it was something that I gave you guys. I said, man, this could just come up to here and also just go ahead and roll over. But what do I want to see now? Right, same thing. Right now, we're actually at a very interesting level, guys, for AUD/USD, where the market can realistically start going bearish from this area. Like, literally, right where we're at right now is an area that's very, very interesting. Reason for that is because if we're looking at, again, this is what I like to look for, right? Let me see. What do you base your entries on? That's a great question, Abdullah. Right, so I base my entries off of where we're trading at, right? And not just that, I base my entry off of structure, where we're trading. Right, I'm always taking an entry whether all my entries are occurring either inside of a supply zone or a demand zone. I'm very big on supply and demand. I do not play with that. If we are not in an area of demand or supply, I do not take the trade. So that's the first thing I look for, right? Are we in an area of supply or demand? The second thing that I look for is, once I confirm that, is I'm also starting to read price action, right? There's two ways that you could realistically take an entry. You can either take an entry, like hypothetically speaking, right? This is all hypothetical, so let me go ahead and just use the replay tool, though. But this is hypothetical speaking, right? So let's say I'm looking at this area of structure right here on AUD/USD, and I want to go ahead and take a trade off of this area right here, right? Because this area can be classified as somewhat of a supply zone, right? Because of the reaction that we've seen up here, right? We've seen the market come up to here and then end up breaking structure pretty aggressively, right? We broke structure right here. We broke structure right here, right? So clearly the sellers, were pretty much taking profit at this level and starting to liquidate their supply, right? So the supply started to becoming more stronger than demand, which caused price to actually drop. So the first way that you can actually play off of a supply and demand zone is that as soon as price gets up into that supply and demand zone, you take that trade as soon as it gets up there. Like immediately, okay? Immediately once it enters that supply and demand zone, you are jumping in that trade no matter what. And then your stop loss is going to be on the outside of the supply and demand zone. Something like this. The other way that you can also watch and play the supply and demand zones is also by being a little bit more patient. Right? Being a little bit more patient. Right? Like actually waiting for price. actually waiting for price to come up into the actual zone, and then you going to lower time frames. Right now I'm on lower time frames. I'm over here on the 15-minute, and actually waiting for confirmation that price is getting ready to shift. Okay, that confirmation itself, again, right now we're starting to see price actually react out of the zone. Right, that confirmation itself, and what I would like to look for is if we actually go ahead and break this level right here, right, this level that we're currently testing, it is a level of structure. If we see price actually break this level, if we, again, listen closely, if we see price break this level, shout out to our newest subscribers, I appreciate y'all, welcome you guys to the family, right, shout out to every single one of y'all. But if we see price break this level, a retest of that level is our entry point all day long, right? So again, this is going to involve a lot more patience though than just waiting for price to get up into that supply zone and just taking the trade immediately. Okay, it's a lot more patience because now you're waiting for confirmation, right? It's all about confirmation, especially when you're a newer trader, right? You want to build up those confirmations. It's very, very important. But either way, you're still going to have patience regardless, right? If you took the trade directly off the tap of the supply zone, you still got to have patience to wait for all this consolidation for the move to actually happen. Or if you're actually going to go ahead and just wait for confirmation, then that's another thing that you could do as well. And then you can go ahead and obviously have patience and then go ahead and get involved itself just like that. But overall, guys, again, like I said, for AUD/USD, we are at an interesting level right now, right? We are at an interesting level. So if we see price break structure down to the low, like if we see price go ahead and do something like this for AUD/USD and we break structure, a move back up into this level of structure is going to be my entry to go ahead and look for that move lower. Okay, so that's how I pretty much look for my entries, right? Normally, I'm actually waiting for this type of play, this type of confirmation play, giving me that confidence that the market is actually going to go ahead and go higher, right? And just to really simplify it even more, right? And now we're going to be talking in terms of smart money concepts, right? I know we got some smart money traders on the call, right? What I like to see is when we are in a supply or demand zone, that's the first thing. We have to be in an area of supply or demand. I like to see the market go ahead and do something like this, where we create an area of structure in that demand zone on the smaller time or supply and demand zone, right? Something like this. We have this equal high that was created, right? And then we see the market go ahead and run those highs to actually go ahead and liquidate all these people that were selling too soon. And then we eventually have enough momentum to break structure. That is literally my favorite freaking pattern to trade inside a supply and demand zone. Like literally that play, that exact pattern right there, right? Like again, hypothetically speaking, if we see price come into this demand zone, we want to go down to lower time frames from the area that you're identifying the zone from. And hypothetical speaking, this is all hypotheticals for right now, right? If we see price come down into the zone, and then on maybe the 5-minute or even the 1-minute time frame, we see something like this, equal low, followed by a break of those lows, and then an instant reaction to the upside. Something like that is all day gonna be an entry reason for me. I'm taking that every single chance that I get, no questions asked. With a lot of confidence too. Like I'm taking that with confidence. Now, just because I'm confident doesn't mean I'm gonna over leverage. Okay, a lot of you guys dictate on your stop or on your lot size. You guys do not pick your lot size based on proper risk management, but you guys pick your lot size based on how confident you are in a setup. Your lot size should not be dictated by the confidence that you have in a trade. You should always have confidence in the trade no matter what. But your lot size should not be wavering, should not be going up and down based off that confidence level. Your lot size needs to be based on exactly what your risk management rules are. On exactly what those rules are. Okay, so overall though, that is the pattern that I love to see. I love seeing that. That is my favorite freaking pattern to trade all day long. Right? So whenever I see that stuff type of occur inside of an area of supply and demand on a lower time frame, sometimes you even got to go to the 1 minute to identify it, right? Sometimes the 3 minute to identify it. But when you see it, take that all day long. So again, with AUD/USD, we did see this equal high be formed. We are technically in an area of supply where we've seen the market start to increase. Right? We see it. We've seen the market really start to shift momentum. So now, if we see the market continue and break this low, hopefully we're able to see this pullback, and then from there we can go ahead and target that continuation lower. That's one way to do it. Okay, just showing you guys what I like to look for. Okay, when I'm looking for my entries all day long. All right, perfect. So let me see what else we got here. Let me go ahead and catch up with the comments. How often does your stop loss get hit and then the market goes in your predicted direction? It does happen at times, you know, and those are just certain things, especially if you put your stop loss in what you believe is the correct spot and that happens, then it is what it is. You have to just accept it and move past it, right? But there are times where that does occur. Now, more times than not, that doesn't happen to me as often as it used to in the past. I used to always get stopped out like that and the market went in direction, right? But that's because I wasn't educated on how liquidity works, right? And how the market is liquidity driven. I was not educated back in the day on that. But now it doesn't happen too often, right? Like I'll say it rarely happens because now I understand where my stop losses really need to go, right? Because I'm putting my stop losses in very, very particular areas. Now, to speak on that though, right? If you are experiencing that a lot, right, where you are starting to see your stop loss get smacked and then it actually goes in the direction you intended, then you are actually being the liquidity that these market makers are actually seeking for, right? Like I said, this market is liquidity driven. And these big institutions, these big banks, these big, the big players in the world, since trading Forex is a zero-sum game, right? It involves both buying and selling to occur at the same exact time for a transaction to occur. You are literally being used as exit liquidity or entry liquidity into the markets when your stop loss is getting hit. So you have to start understanding that. If my stop loss keeps on getting hit before it actually goes in the intended direction, then I need to stop falling for the traps that the market makers are creating and understand what they're actually doing. Okay? So yeah, but it has happened to me a lot of times in the past. Not as often anymore, but it definitely does happen to a lot of people. Let's see. I'm in a funded challenge. I was up 2%, but this week I lost it all. I'm still in the challenge, but I got to be more patient. I took some trades without confirmation and paid the price. Crazy. You know the positive thing about that, right? You definitely want to obviously try to reflect on. I mean, you already know what you did wrong, right? So the positive thing of that whole statement you just said, even though you did end up losing, what you were actually up for the week, at least you have awareness. You have awareness to understand exactly what you did wrong. But you know what goes hand in hand with awareness? Because having awareness is only one part of the equation. Discipline. Right? So you have the awareness to know exactly what you did wrong or what went wrong. You took trades without confirmations and you paid the price for it. But now you have to have the discipline to change it. Okay, crazy? Right? So what are you going to do differently next time that's going to allow you to actually not take those type of losses? That's what's going to dictate if you're going to be a really profitable trader or not, is if you have the awareness to understand what you're doing right and wrong, but you also have the discipline to pretty much change it and get better. That's the big deal right there. Okay? Let's see. We got the boy Skaggs in the building. What's going on, my brother? I appreciate you. Shout out to Skag. If you guys are not following Skag Academy on YouTube, family, go ahead and show the boy some love. He is honestly somebody that I consider as a mentor for me. All right, we've been in this game together for the past 7-8 years. And trust me, he's probably one of the most accurate traders. When I say his precision is next level when his entries, I can't even get entries like he gets, right? So if you guys are looking to really perfect your entries, my guy is definitely somebody that I want you guys to go ahead and follow on YouTube. Just go ahead and search up Skag Academy. And yeah, go ahead and take advantage of what he got to offer. I promise you it will be game changer for you. Right, but let's see what else we got here. I took a sniper sell entry at 17.16. My target is 17.10. Should I hold it until my TP or should I close it now? I think gold should sell more. What do you think? That's a good question, right? Now that we're done with AUD/USD, you guys know what I'm looking for. I really want to see a continuation. Let's go ahead and take a look at gold, right, and see what gold is ultimately up to. All right, so you said you took a sell at 17.16. Okay, so you took it right over here. Okay, and your target is 17.10. I mean, 17.10 is not that far, right? 17.10 is not that far. I mean, that literally could probably happen right now, especially how we're reacting off this moving average, right? 1710 can actually get smacked pretty close, right? But just because of the, the craziness of the market, go break even on your trade if you're not break even just yet, right? Make sure to always, protect yourself, right? Again, risk management and capital preservation, guys, is the number one rule in trading Forex, right? Capital preservation is the number one rule in trading Forex. So make sure you have your stop loss at break even. But overall, right? Overall, there is a chance for it to reach the 1710. We are reaching back to levels of structure. But if I'm being honest, and I mean, it's hard for me to really look for buys for gold. Every time I try to look for a buy on gold, it never ends up playing out, right? It never ends up playing out, right? Especially right now, just because of the dollar dominance that we've been experiencing, the gold has been absolutely getting destroyed. Even after this nice, strong shift in momentum, at least what looked like a shift in momentum, it still didn't even hold true. So even if the market does end up bouncing up, because there is a chance for price to push back up, maybe up to this level of structure at 1723, I do still expect it to overall continue rolling over to the downside, right? So that's pretty much just my outlook on gold. I would love to see it actually go ahead and go higher, back up to structure, and then maybe off of these levels of structures up here, we go ahead and see a continuation lower, right? But that's just my opinion. In terms of your trade, though, I mean, 1710 isn't too far, right? Literally, what, 20 pips away or so? Right, so it's not too far, so hopefully it does go in your direction. But if it doesn't, just at least you're break even, so you can't lose on that trade, and then just find another re-entry maybe somewhere around 1723, 1724. All right, so that's just my recommendation over there on gold. All right, on gold overall. Let's see what we got here. Entry after clearouts and then the reclaim of support or resistance is the best. Yeah, exactly, attrition. Right, that's literally what I like to see. Right, it's like one of my best. That's the best confirmation to entry. Right, the charge. Yeah, 100%. It's just so easy to identify. Right, let's see. I passed phase 2 today. Now I'm only taking maybe 1 or 2 trades a day. I'm getting this. Let's go, Tony. Everybody, can we go ahead and just drop some congratulations for Tony for passing phase 2 of the challenge? Right, drop some congratulations in the chat for my guy. Right, that is massive. You guys know that we are here a community of showing love and showing support. And anytime we see a fellow member, passing a challenge or getting some type of results or seeing some type of success, man, we got to celebrate like it was us that actually accomplished that. Right, like celebrate like it was you that just passed phase 2, right? Like we got to show love, right? That's one thing about me, guys. Like I don't play when it comes to hate. I don't play when it comes to none of that. And I don't play when it comes to showing love. We gotta show love as if we're the ones that just accomplished that goal, right? So massive shout out to you, Tony. That's amazing. And I know you're not the only one that's eventually gonna really get funded. I know we have a lot of people in the chat right now in the community that's also gonna be the next round of funded traders, right? So big shout out to you though for leading the way, right? But yeah, overall gold, that's what I'm pretty much looking at. Let's see. Well, that's my problem with gold. Ride the trend. Don't try to predict the change. Yeah, exactly. Right, I tried to predict the change on gold and didn't work out. Right. Let's see. How do I become an inner circle? Yeah. You gotta just go ahead and click the join button that's next to the subscribe button, and once you actually become a member in one of those memberships, then go ahead and send me a message, and I got you, Winston, for sure. All right. Let's see what we got here. Yeah. So overall, though, guys, that's gold. Right. Let's go ahead and see what else we got here. GBPUSD. Again, GBPUSD as well. I'm still being patient with this one. Again, I had another setup that I was looking for that I set last night that just did not end up playing out. Now, again, we are at there's 2 different areas that I'm going to be keeping my eyes on, guys, for GBPUSD to see if we can actually go ahead and play off of. My first initial area is pretty much the area that we're playing off of right now. Right, there is a chance for the price to actually go ahead and continue rolling over from this area 100%. Or price might want to go ahead and seek higher. And then if we get up into this level, I'll also be looking for shorts off of there as well, right? But overall for GBPUSD, guys, I'm still expecting long-term bearishness. It's just a matter of now finding that entry. Now, how do we know if this area of structure or if this possible area of supply is actually going to hold? And if this is going to be an area we actually are looking into? We go to lower time frames. Right? On lower time frames, just like I mentioned, we actually start to read price action. Right, for me on lower time frames now I'm actually going to start fine-tuning what we're actually looking at. Right, and there's actually a chance for price to actually still go higher. Right, I'm very interested in seeing price come up into this area right here with this little short-term, or not short-term, but this little order block right here, right, where we had bullish, bearish, bullish continuation pattern that actually showed a little 3 candlestick, order block pattern right there. If we can see price come up into there, guys, that's where I would genuinely be interested in really looking for some, some continuations to the downside, right? So overall, I'm looking for this 1.186 level for GBP USD, 1.186. If we can go ahead and see price get up into there, then I would love to go ahead and really look for some shorts. Now, again, the market doesn't have to reach that high, right? So I am going to highlight another key level that we're actually testing on right now. If price for whatever reason ends up just continuing in its bearish move, or continues to go lower from right here, then this is also another area that you can keep your eyes on. Like if we see a break of this level right here, a break of the moving average, then a return back up to this level, guys, of structure can also be an opportunity for you to go ahead and get involved for GBP USD. And it does make sense because, again, look at what structure has done at this level. Numerous amount of times, we have seen the market react as both support and resistance, at this price point, like numerous amount of times, right? So, that's pretty much, again, it's a good area that we can also look for a re-entry if we do just continue. If we break this moving average on the 5-minute, the 50 period, and, that will be an area that I'll also be looking for, or that we could look for an opportunity to go ahead and go short on. Right, for GBP USD overall. Right, so that's just another outlook that I'm looking for. Let's go ahead and take a look at GJ. Right, GJ is definitely one of my favorites. Right, so let's go ahead and take a look at GJ and see what we got here. Again, GJ, another one. It didn't necessarily reach the area that I was initially looking for, but I was able to actually get an entry on GJ because of us just retesting and reacting off of structure. And this is something that I was actually paying attention to. All right, as well. So overall, I was able to get an entry, guys, pretty much when price came back down to this level of structure down here. Right, now let's go ahead and go lower time frame and show you guys what I was pretty much looking at as well. Right, so when price came down here, guys, to this area of structure, all right, I noticed what price was doing, and then I ended up taking an entry down here on this spike. All right, look at that boy Winston. Shout out to that boy Winston, new sponsor to the family, my brother. I appreciate you. Welcome to the wealthy fam. Let's go. Family, go ahead and drop some welcomes in the family. Drop some welcomes in the chat for our newest member. Winston, you already know, bro. Go ahead and send me a message on Instagram. I'm going to check your Instagram messages as soon as we get off of here. And I'll go ahead and send you that link to the private chat that we have for anybody that's strictly a part of, this private inner circle chat that I have created. All right, so I definitely appreciate you. Go ahead and drop some congratulations in the chat, to that boy Winston. I appreciate you. Right, but overall, guys, right, so what I was looking at today and tonight, or not tonight, but I was looking at this morning, guys, for GJ, obviously seen this massive run up, and then overall the market did start to give us this correction, and then we ended up forming this little pattern right here, which is what really caught my attention, right? Like this low right here that was actually created. Again, remember what I told y'all, right? We have this little equal low situation, right? We've seen the equal low. We are technically in a very significant area of structure. And then once the market ended up spiking below here, like once we ended up spiking below this low and breaking this low, that's when I really started looking for entries, right? And I ended up getting in, guys, once we ended up breaking. Let me show you guys exactly, right? And I was on the 5-minute, literally the same exact time frame, right? So once we actually broke this bearish candlestick, right? Once we actually broke the high of the bearish candlestick, this last little candlestick right here, once we broke this high, that's when I decided to actually go ahead and jump in. Right, so I ended up jumping in right here. The market went up in our favor, right? It didn't go too much, went around 30-40 pips. It did end up coming back down, but overall, I was still holding, and and then I was able to go ahead and catch this next move higher for around 50 or 60 pips or so. All right, so that wasn't a bad play overall, but that was pretty much what my entry was. Even though I did have to eat a little bit of drawdown, it wasn't no big deal, but overall, I was able to still grab around 40-50 pips on this trade. Before the market just really started going sideways. But what can we expect now, right? What can we expect next, guys, for GJ? Well, again, GJ is also very interesting. We do have, this reaction that we just seen right here, right? We got this bullish candlestick, this bullish engulfing that pretty much shown. So this is showing that the demand for this price, right? The demand for GJ at this price point is actually very attractive to investors and traders. So what I want to see is I want to see price come back down below this level. And in here, we go ahead and look for some more opportunities to go bullish. Right? So we have, again, let me show you guys what I'm looking at. We have this level of structure right here. Let me actually highlight it for y'all. Right, we have this level right here, these equal lows. I want to see a wipe of the equal lows. I'm going to be looking for price to come retest this little order block right here. And then off of there is where I'm going to be looking for my entry. Right, off of this little order block right here. And then from there, I'm going to be looking to go ahead and ride this thing up. So this is literally going to be my play, guys. Right, my play for GJ going into tonight. Okay, very good looking setup though, right? I like it. It looks nice. It looks juicy. So this is really ultimately what I'm going to be looking for, right? If we're able to get down to around this 163.8 level, then I'll definitely be comfortable enough to go ahead and look for a long position, a long opportunity right here, right? It's going to be something like this that we'll be able to go ahead and take advantage of. Target back up to the highs, right? Something like this. And this is, again, not bad because it's 6.83 risk to reward. So we're talking about risking 2% to going for almost 13%. And I would do that every single chance that I get, right? Again, this is one of those setups, guys, especially because the risk to reward is so good that if you're doing one of these funded challenges, man, you can pass this funded challenge literally on one trade, at least phase 1 or phase 2 on one trade, if this actually does play out. Like if it comes down here and then goes in our favor, then yeah, that's a big bag, right? Big trade that I believe can actually go ahead and really play out. All right, so overall, that's what I'm looking at for GJ as well. Does not look too bad at all. All right, so let's just go ahead and take a quick look, guys, at the indices and see what I believe can actually happen for the indice market overall. As of right now, guys, again, we are on the daily bigger picture outlook for this. You know, we are pretty much retesting this level of structure right now. You know, very significant level of structure where the market is just failing to actually break below, which is just showing that the demand for the S&P 500, guys, is, you know, is pretty attractive right there, right? We got Dom Dada. Dada. What's going on, Dom? Appreciate you, my brother. Welcome to the Wealthy Fam. Let's go. Send me a message, my brother, on Telegram or on Instagram, and I'll go ahead and get you added into that chat as well, my private community. Let's go. I love to see the community grow. I love to see everybody going ahead and participating and just looking to get better overall. Right, so yeah, guys, this is what I'm looking at for the S&P 500, right? Again, for me, I'm still expecting overall continuations lower, right? I'm very much still bearish on this opportunity, guys, on these indices. I still expect a lot more downside for these indices. It's just a matter of what is the market going to do next, right? Again, as of right now, we are seeing a lot of rejection from this area, okay? So there is a chance for price to pull back higher. Right, and we do have these equal highs right here, so there is a chance. It's hard for me to say that that's what I really want to lean towards. I personally think we're probably going to see the market just rebound a little bit and then go ahead and continue going lower. But there is a chance for price to go ahead and run these highs, come up to this level of structure, and then go ahead and finally get back into this overall downtrend. That is also very possible to occur. It is very possible, right? Again, I don't dictate what the market's going to do, but I do like to go ahead and at least give my ideas a look at, right? So I think, though, we're not going to be able to reach that high. It is possible. And if we do ever see price come back up to this 4,100 level, guys, then you better be looking to sell that, in my opinion, of course, right? In my opinion, that is definitely going to be, you know, a reason to go ahead and look for some shorting opportunities here, guys, especially around this supply zone that we have up here, right? Big shout out to our newest subscribers to the family. I appreciate y'all. Welcome to the family, guys. Let's get it. Right, but yeah, overall, like I said, you know, there is a chance for price to go all the way up to that supply before we turn around. Again, I don't think it's going to happen, but there is that chance of it actually happening. Now, what am I actually looking for, though? Right, what would I be looking for in order for price to actually continue? You know, and this is, again, not expecting the price to go all the way up to the supply. Well, I think there's a chance for price to still come up to this short-term area of supply. Now we're on the 15-minute time frame. We were actually on the daily time frame last time, but now we're on the 15-minute, right? What I think can happen on the 15-minute is that we actually go ahead and spike up into this area of supply where we clearly, I mean, this was definitely caused by news, right? This was caused by the actual CPI report. But overall, since we had such a bearish reaction off of the data, there's probably still a lot of unfilled short orders up here waiting. So I would not be scared whatsoever, guys, for the S&P 500 to come up to around the 3830 level And from the 3830 level, we see the market absolutely tank from that area. So if you are an indice head, if you do like trading indices, which again I know is something that's very popular now, a lot of traders like trading indices, this is an opportunity to go ahead and get involved for at least the S&P 500. Around 3834, that's where I will start looking for some shorting opportunities, and that's where we could really potentially see the market go ahead and collapse and get back into that overall bearish trend. Right, so that's just my opinion, guys, over here on the S&P 500 as well. But that's pretty much the main setups that I'm going to be looking for, right? The main ones I'm going to be keeping my eyes on is GJ for sure. Right, I think GJ is definitely going to be very, very juicy for us. Right, the next one is definitely going to be EURUSD as well. We'll be able to keep our eyes on it. If we do, I don't think we're going to get up there, but if we do, then I'm selling the hell out of it. AUD/USD is definitely going to be one I'm going to be keeping my eyes on for sure. So the main ones are probably going to be GJ, AUD/USD, and maybe the indices, depending on how it's looking at for New York session overall. Right, but I do like this AUD/USD, guys. Again, if we do see price go ahead and finally break, you don't even need to wait for a break of structure. Right, if we do see price give us a nice reaction back up to here, then that could be an opportunity to go ahead and go short. Right, so it's just something to go ahead and keep your eyes on, guys. But those are the few opportunities that I'm keeping my eyes on going into tonight. You know, overall, like I said, this week has been very, very interesting to say the least. You know, we've seen a lot of different scenarios that didn't play out for us. You know, that I had to pretty much not just depend on a pending order, and I actually go ahead and, you know, take some trades via market execution. But it is what it is. You know, it's a part of the game. You have to be able to really adjust, guys, to what the markets are doing. That's your job as a trader, is being able to adjust is absolutely crucial. Right, but that's pretty much what I got for you guys tonight, family. It is a very short session. It's probably one of my shortest streams that I've done with y'all. But again, you know, we're getting straight to the point tonight. You know, I definitely hope that you guys were able to gain some value off of this stream. You know, I hope you guys were able to at least just take something, right? Again, I don't want you guys to try to take everything from this. Just try to get that one piece of information that you get from these streams that just, you know, turns on a light bulb for you, right? That just brings a little bit more clarity into what you guys are doing here when it comes to trading. So overall, definitely take advantage of the setups that I gave you guys tonight. I'll definitely keep everybody updated via my public channel. Right, if you guys are not in my Telegram channel, then go ahead and make sure to be involved in it, guys. There's a link that continuously being sent out pretty much every 15 minutes, guys. My Telegram is sent out in the link via this bot that I have working for me. Right, so definitely go ahead and make sure you're in there. If you are a part of the inner circle, you guys know that we'll be in there as well, talking a little bit more in depth, really having a dope conversation on exactly what the market is doing and what we can expect to do. And I'll be go ahead and giving you guys all updates as well, you know, in the morning as the market starts to pretty much wake up. So family, I appreciate y'all. I love you guys. It's been a phenomenal week overall. I am back again on Tuesday, providing you guys with more and more value, and I look forward to continue helping you guys all grow overall. So I appreciate y'all. I love you guys, and I'll see you guys next week. Let's get it.